I don't have solutions for every problem today, but what I would definitely like to do is to at least put the three big things to solve for in each of these. Reduce the socioeconomic barriers, address digital skill gaps across all segments of the society, and third, continue to extend the accessibility of broadband infrastructure. If we did all of these steps, then we may be getting onto the journey of the transformative potential of this digital revolution. So we spoke about the 1.7 billion people. Let's talk about the SMEs, right? The reason we wish to address this with focus is in Asia Pacific, SMEs comprise 95% of all enterprises, employ half the workforce, and contribute 20 to 50% of a country's GDP. That's the impact this pool brings in. So you would imagine that SMEs, being such a critical part of a nation's economy, would actually find it easy to get financial resources, credit and e-payment tools. Not quite. That's not the case, right? Worldwide, they face a funding gap of 5.2 trillion US dollars, and more than half that gap actually is in East Asia and Pacific. And in a large part, that gap exists because it's difficult and it's costly for large banks. We always get to large banks to solve what we think are large problems. It doesn't work that way too. It's very counterintuitive. Large banks that control capital investments in emerging markets find it very hard to assess small firms' creditworthiness. And that's why this gap just gets created and continues to grow. And the gap feeds the SMEs' problems, the key challenges that they face, which is easier access to capital, getting paid on time, and lastly, integrating digital payments seamlessly into the way they do business. This is a very important part because once they can integrate digital payments into doing business, it becomes easier, and I'll talk a bit about all of this, right? The good news though is digitization is actually helping solve all of these three problems, right? Let's start with the easier access to capital. Alternative financing is growing fast in Asia and is proving disruptive. Multiple options, right? Peer-to-peer lending, business lending, invoice factoring, crowdsourcing, all of this is actually working. But there is a perception that alternative lending is risky. I don't believe that's necessarily true either. So the Indonesian platform, just to quote an example, Acceleran, and maybe some of you actually know it, its ratio of non-performing loans is 0.5% compared to the national average of 3% plus. That's well below. How does improved access to capital work in practice? One very powerful example from China is actually Ant Financial. Its 310 lending model is so named because the application process takes 3 minutes, the loan approval process takes 1 second, and there is zero manual intervention in the entire process. Platforms like these then, what do? They're using credit scoring models that go beyond the usual querying of financial assets and performance, and to many of us, I was a banker in a past life, and many of you may be, right? Our immediate go-to is to assess P&L statements and balance sheets. That really doesn't tell anything, it's a stock point, right? These guys, they include parameters like online behavior, customer reviews, cash flows, and therefore, without the power of digitization, such businesses would not even exist. The second SME challenge is getting paid on time. Indonesia's Acceleran, for example, offers SMEs up to 80% of the value of their receivables for up to 3 months. So the SMEs use up the freed up working capital to take on more contracts for as little as 1.5% per month, which is perhaps less than what banks would offer and very much lesser than what the informal lending system would offer. And the last element is integrated digital payments. A couple of examples practically from my own professional experience come to mind, right? Whether it's OVO in Indonesia or the GeoPrime program in India, both target the small micro merchants and enable them with point of sale payment capability that's integrated with a full suite of SME business solutions, whether it's record keeping, tax filing, inventory management, loyalty programs, all of that comes together with the payment capability. And when you do data analytics on such rich payment information, you can get better credit scores, more access to finance, higher sales, better returns, and then the virtuous cycle kicks in. With that, I come to the last population pool, right? Those that are included in the financial system, but digitally excluded. This is not a small segment. We have billions of people who are actually being banked but not transacting, right? Consider the situation with cash on delivery that makes the point. Even where people have some digital tools, can order the goods online, payment remains a challenge. Payment is in cash. India, Thailand, Malaysia, Philippines, and Indonesia, most e-commerce orders, unfortunately, are paid via cash on delivery. That payment method creates payment cycle pressures throughout the supply chain, and we estimate costs these economies more than $1 billion in annual costs. Cash on delivery is not a technology problem. It's a trust problem, it's a security problem, it's a payment problem, and it is a consumer preference which has been enabled to work around missing building blocks that we referred to earlier. It's also an example of how the absence of digital adoption creates these negative externalities, right? A consumer's inability to access digital payments or lack of trust to make a digital payment results in cash payments, which takes longer to process, SMEs get squeezed, and it takes longer for them to get paid, so the whole cycle gets disturbed because of this. Again, what do you need? 3 solutions, right? I only talk in 3s. The first prong, protect all personal and private information, and I think Park spoke extensively about this on the digital ID and biometric identity solutions, right? Investing in adequate processes, technology, and security standards when collecting personal information. As a business, it's your responsibility to do that, because otherwise consumers are not going to trust you. The second, all digital transactions have to be made secure, which basically means weak authentication methods. Regulators need to dispense with it. What is weak? Your grandfather's name, your mother's name, 1, 2, 3, 4, 5. These are not passwords. These are invitations to the, evil-minded. They leverage technologies such as tokenization so that unsecured data is not flowing across the network. What is tokenization? In simple words, it is an alternative number assigned to either your bank account number or to your wallet number or to your card number. It is just basically masking the real detail from traversing the web, so that even if the information got into the wrong hands, they can really do nothing with it. Use digital identity certification. Park spoke about it, I'm not going to repeat that. And then utilize different standards in financial and non-financial messages and proprietary message protocols. We really have to make our message standards much more solid. The last and the final prong is to defend against attackers, because they're always looking to seek out the weakness, right? The security infrastructure that you deploy across all the components of the value chain could in itself be the risk, which is why when Internet of Things advances, and we all talk about the Internet of Things and the seamless connectivity as if it's a big blessing, you also want to think about how big a risk Internet of Things could be. It amplifies the risk of breach hugely. So it is these connections between devices that can be the weakest link. I can tell you examples about how large financial systems have been broken into through air conditioning equipment. So, you would normally not relate the two, but it could happen. It's in the end, all chips talk to each other, right? So, three of the 4 parts that I started off with, the ICT sector, the building blocks, and the target population codes. Now let's spend a minute to talk about what is the likely outcome if we actually executed all of this. We estimate, we estimate that a fully realized digital dividend could add $1 trillion to ASEAN GDP by 2025. But if you added India into it, it represents a staggering 2+ trillion in potential dividends in this region. This is non-trivial. This adds anywhere between 10 and 20% to the BAU digitization dividend of any economy. And that's my point. Internet access is not enough. All these building blocks that we spoke about have to be present for people to share ideas, innovate, buy and sell, and make the transactions, because it is ultimately the quantification of these transactions that we call this thing called GDP, right? And lastly, I just want to spend 30 seconds on what MasterCard does on this, right? We are experts at facilitating digital transactions that lead to the exchange of value across ecosystem. Not all digital transactions, only those that lead to the exchange of value. That means we are experts at building blocks of trust, authentication, security of information and transactions. We work with regulators to create these growth frameworks, and of course digitize finance and payments. A quick couple of examples. We partner with companies like Microsoft and Samsung, and we're working in Australia to create the government ID program. We also work with Singapore government, with the Thailand government to set up their real-time payment infrastructure to boost digitization, ensure security solutions at a national level. We partner, like I said, domestic schemes, right? So even here in the Philippines, we are working with the National Switch Banknet to give them real-time payment infrastructure that will leapfrog several generations of payment technology and bring this country to the forefront of real-time payments. And as someone who's deeply involved in all of these initiatives, I can tell you that this race towards what I call the digital democracy, it's just started. We are very far from the finish line. And I do agree with you, Park. No one should really be left behind. Thank you.
Thank you very much, Ramaswida from MasterCard, to set the tone for the meeting. And we're going to explore more of these questions, how to include the underserved, the poor, into the formal economy later with our first panel. However, a few introductory remarks. First of all, I hope you have all downloaded the app. If you haven't downloaded the app, you have to go to your Google Store, Apple Store, and type in Third Asia Finance Forum and you will see the app, and then you can fully engage, because we are using the application also for asking questions. And it's very important that you not only, if you ask a question, you can also vote for the most popular questions, and our moderators are supposed to address the most popular ones, okay? However, we have an interesting menu in the next 2 days for you, meaning we are also having 2 breakouts, one today, one tomorrow, where you can choose your favorite topic, and we're gonna split this room into 3 parts. All these announcements will be made at the end of the morning. And another thing, or another feature we have here at the Third Asia Finance Forum is a marketplace. We have 11 solution providers who also have a stand, I think, outside, but they will introduce you to their services at the end of the day. And in the evening, we're going straight into our network reception, so there's a lot of space also for networking over a glass of wine or a cocktail or whatever we serve. And last but not least, we are having all the information on the app. So if you're looking who's in the room, the speakers, the bios are there, the participants, and so on and so on. Everything is on the app, so please make use of it. There's even a social wall if you want to post a comment. Time management. You hear from my accent, I'm German. I had already a conversation that Germans and Singaporeans have a good or bad reputation to be always on time, depends on where you come from. However, I brought a timekeeping instrument. We are approximately 300 participants, so you won't hear me shouting that you have to come back to the room, we have to start. So I will gong. Okay, that's more gentle, yeah, so I didn't bring a cowbell. That's, some people associate that with Germans and Swiss people, and Austrians. So this is a timekeeping instrument, and we try to have sufficient time for lunch, for coffee, so that you can actually meet people, because we have an amazing diversity of people in the room. However, the question about PowerPoints, you already saw the first one, or actually 2 PowerPoints. They will be made available throughout the forum, and until the end of the forum, all the PowerPoints should be on the app. So at the latest Friday morning, the last PowerPoint should be up. Let's start maybe, last thing here. We also have Mr. Keske here. He's our graphic recorder. He will also try to visualize our conversations as much as possible, at least the ones in the plenary. So as we are in the digital age, he has moved now from using a paper board to using this digital device, and you will also get a copy of that one. So if you don't take your own notes, you get your copy of the visual notes. However, who's in the room? So as I said, you see it in the app. However, we also want to show a little bit the diversity. So, can you take out your mobile phone and open the app? Hopefully many of you have downloaded it already. Otherwise, if you have any problems, we have a help desk and we will help you to access the app. You don't need any code, you just have to download it and open it. Okay, so, and you should see when you open the app that there is on top a survey, intro survey I think it's called. Intro survey. And now I would like to request you to choose your region where you work and live. Many of you are not living in your country of birth anymore, and it's not active. Can you activate the survey? Otherwise we have to go old school by hand sign. So I just want, can the quick hand sign if we do old school or digital? Okay, Pak Bamang said he likes old school. Okay, so who's from the Pacific region? Can you raise your hand? Yes, that's quite a number. West and Central Asia. It includes like countries like Armenia and Georgia and so on as well. South Asia. Yes. East Asia, Mongolia, China, Korea, Japan, and so on. ASEAN plus Timor-Leste, but not Philippines. Who's from the Philippines? You see, that's why I didn't ask. There's so many of them. Rest of the world, that's the Americas, Europe, Africa. Okay, there are quite a number of people who traveled a long way. Okay, and are we ready for the next one? So can we go to the next one, or shall I do? I don't see any thumbs up. Okay, so who is a government official? Government officials, please raise your hand. Nothing wrong about being a government official? Yeah. Who's a private sector representative? Private sector companies. Is it there? Ah, here we go. So let's do it digital, because it's about digital finance. So please use your app and we see. So sometimes you might want to shift groups, or you're a member of 2 of them. You have to take a decision. So now we reached more than 100 votes. So let's have at least 150. And you see that we have a large number of colleagues from the private sector. Okay, so we're more than 170 people already. Okay, I'll give you another 20 seconds so that you'll get used to the app. Yeah, so that's one of the reasons also we do that. Okay, so you see we are already at least confirmed 194 people in the room. So we should be up to 300. So hopefully more people will make use of the app. So, and the last question I have for you is actually an opinion poll. So, Rosa, can you show us the poll? Oh, it's okay. Here we go. How optimistic are you that we can bank the financially inclusive about 850, like in the video, or 900 million people in the Asia and the Pacific by 2030? How many of you are very optimistic, or very confident, or somehow optimistic, or maybe realistic, pessimistic? So I would like to have opinions from 200 people at least. Okay, so we have approximately 20% of you are very optimistic that we bank everybody in the Asia and the Pacific. And 70% say we make some considerable progress, but still there will be some 100 million left. And only 2% are actually thinking we are going backwards. And we are not going to ask who are the pessimists in the room. Okay? So, thank you very much. Please be reminded that for each panel, you have the opportunity to ask questions. So if you open the app, there will be an activation for each panel by our colleagues that you can ask questions. However, each moderator for each panel will ask a few questions first to our panelists to kickstart the conversation, and then for the remaining time, we're gonna address the most popular ones, okay? So that's how we're gonna run it. So let's continue then, and I have the pleasure to call upon all the panelists for the first session. May I request all panelists and the moderator to come here on stage. We're gonna remove this one later because it's a little bit in the way, because we are not going to have too many presentations here. But Robin, can you please come up? Can all panelists come up? I think you know who you are. And I'm also now introducing you only to the moderator, and he will introduce his guests. We have to inform you that actually our designated moderator couldn't make it last minute, but he sent one of his most experienced colleagues. Many of you know him. So he's the head of policy analysis and capacity building at the Alliance for Financial Inclusion, who is also a partner in this third Asia Finance Forum. So ladies and gentlemen, please give a warm welcome to Robin Newham.
Thanks so much, Jost, and like the previous speaker, I'm very happy to be on stage early in the morning. And ladies and gentlemen, thank you first very much to the ADP for inviting AFI to this forum and for inviting us to moderate this opening session. As many of you know, AFI is a global network of financial regulators and policymakers very committed to achieving financial inclusion through smart policy making. And we've been partnering very closely with ADB for a number of years now, as well as having the Central Bank of the Philippines as one of our founding members. So it's always a privilege and a pleasure to come back here to Manila. Now, in this session, we're going to probe recent developments in technological innovation, of course, how such innovations are actually transforming the lives of the very poorest populations, and also how ecosystem actors can really come together and collaborate and work effectively to achieve the outcomes that we all desire. So to discuss this, I'm grateful to be joined by a really stellar panel I'm going to introduce to you shortly. But please allow me first of all to say just a few words to set the scene. Now, in many ways, I think it's evident to all of us that have been following financial inclusion over the last decade that financial inclusion and technological innovation really go together almost hand in glove. We simply cannot dream of achieving an inclusive financial system for all without taking advantage of the breakthroughs that are there from technological innovation. And that's been evident as far back as the development of M-Pesa in Kenya, the first mobile money scheme 12 years ago now, which allowed unbanked Kenyans on feature phones to make payments and send and receive money securely, and has now allowed access to a full range of credit, saving, insurance, other financial products. We've seen similar mobile money schemes take off across Africa, Asia, and Latin America.